FedEx is one of those, and the delivery services company announced its plans to consolidate its operating companies into one organization as FedEx continues its cost reduction efforts for the next 2 years. And just briefly, here's some details of the plan. As the president and CEO of FedEx said, this organizational evolution reflects how we represent ourselves in the marketplace. They're going to be focused more on flexibility, efficiency, and intelligence, and trying to position to execute on some of the logistics network improvements that they've continued to invest in. And there you're looking at some of the savings that they're looking to target over the different segments here. But what's also worth noting here is how the divisions are actually going to be structured and kind of siloed, if you will, where freight will kind of be its own standalone internally there. And that was particularly of note here, at least within our own newsroom as well, and how this structure will move forward. Yes, and the bottom line is $4 billion in permanent cost savings going forward. So we'll have to see how that plays out. But so far this year, if we can go to the Wi-Fi Interactive, we can see how it's played out with the stock price. Now, this is the Dow Jones transports that are factors, components in the Dow Jones Transportation Index. You can see FedEx in the #1 spot year to date, up 35%. This is a company that's had execution problems in the past. They are now in the midst of a big turnaround strategy. Let's see if I can pull up the chart and get a 5-year view so we can see the pandemic as well. Sank to those pandemic lows, got to some highs here, and just barely breaking out of this downtrend this year. So off to a decent start for FedEx, I will say, and that it is above the returns of its rival UPS, about 9.7% by comparison there, Brett.